Hi guys, good day. Yeah, I'm aware there was no sound. Sound was actually on pause. I was still actually waiting for this to join us. I hope you can hear me now correctly. Am I audible right now? Can you guys hear me? Good now. Great. Hi Cynthia, Notable, James, K. Killian, Gum Elfrida, John Benjamin, and Clovillian, Gum Elfrida, John Benjamin, and Clovis, Sandrine. You guys are welcome. Yeah, you can hear me. You're welcome. Excellent. How is your day? How is the Friday? How was your week? Trading week was good. Did you see that? Do I need lights? Okay. Trading wasn't all good for me, but I'm holding up great. Good afternoon, sir. Hi, everybody. You guys are welcome. Today is Friday, and every day is a very good day to trade, right? Every day is a certain day to make money in the market. But like I said last week, Fridays are days that um, are not very good to risk a lot. So if you're trading on Fridays, you should be very, very, very keen and meticulous about how much money you're risking and how much money you're actually trying to let go. Hi Kiki, how did your thing go? Has it worked? I hope everything is good now. Has everything been resolved? I hope great. Go. Has it worked? I hope everything is good now. Has everything been resolved? I hope great. So we're going to get started. Like throughout the week, you guys have analysis of possible trade entries. So on Fridays, I'd like us to look at what happened this week and what can we actually anticipate for next week's market. If you have the opportunity to see a trade, we will take. If not, we'll anticipate. Now, last week we looked at Bitcoin together and we shared very, very good insights on Bitcoin. And if you look at if whoever saw it, Bitcoin came to our zone and bought tremendously. I don't know if someone who here took the Bitcoin trade. Did you see how Bitcoin had that very, very nice buy when it came to our zone? I don't know if anybody saw it, but last week we had a very good Bitcoin analysis and it was great. So I'm going to start by sharing my screen. We'll look at what we've seen this week so far and how we can actually anticipate next week's data. Without further ado, where is my screen? All right, great. Okay, if you can see my screen, let me know. So this week on the fundamentals, like I would say all the time, fundamentals are very essential. Fundamentals actually move the market. Everything that happens on the market is due to fundamentals or is due to how socioeconomic or geopolitical events push the market. Oh my. Okay. The screen is just showing dark. Am I audible? I can see now. All right, great. So we are here. Let me just come. Okay, so you can see my screen. Great. So this is what we have. So this week started actually very, very impulsive on Tuesday. Monday, we had nothing really serious. We had news on the Chinese yuan. And Tuesday, we had a very, 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 very great. We had CPI. CPI actually came out negative. That means that the dollar sold instead of buying. And I think we had analysis on Tuesday with Mr. Gentleman. For whatever reason, he had to sell, right? And on Wednesdays, we had nothing serious. On Thursdays, yesterday, we had a lot of fundamentals. We had employment change from AUD, GDP from GBP, and we had PPI yesterday and unemployment claims. Powell also had to speak yesterday night, so the market was really, 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 really volatile yesterday. So today, Friday at 3 p.m., we have USD prelim consumer sentiment. And if you've never taken actually a forex class, when you come to look at fundamentals like this, 3 p.m., what you'll be expecting in less than 20 minutes, about 19 minutes. When you see this, we have USD prelim consumer sentiment. Now, this is what we're looking for. We want to look at this. We have the previous and the forecast. What was the previous? Now, first off, we open the envelope to see what's in the envelope. If you open this envelope, what have we got? We have usual effects, right? I hope I'm audible. I can see your screen great. We have usual effects here. Actual greater than forecast is good for currency. Greater than forecast is good for currency. What does it mean? Previously, they had, that was on the 13th of June, sorry, released monthly. That's last month, they had 52. Consumer sentiment came out 52.2, and they are forecasting a 53.1. So they are showing an increase in the dollar. They are forecasting an increase in the dollar. That means that if it comes out 53.2 here, we should anticipate the dollar going up. If it comes out 53.5, whatever, above 53.1 means dollar is going to go up. Below 53.1, so if it comes out 53.0, we should anticipate a sell. Now, but now, what's the difference between 52.2 and 53.1? It's not so much, all right? But if you look at the history here, April 11th, March 14th, February 7th, January 10th, January, February, April, March, we've got negative, 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 negative. It has become negative all these months. So since this year, it's been coming out negative, negative, negative. The forecast was here was 74, 74, it came out 73. 71.1, before 79 came out 67. So now what do we anticipate for this? For today's sentiment, 52.2 and 53.1. Now, how do we now use this data to know what to do in the market? We go to the chart. Now, we're going to look at first, if we come to the chart quite fast, we're going to look at DXY. We're going to just look at what the dollar is showing real quick. Please zoom a little. We can't see the right things. I'll try to do that. At what is happening to the dollar index. Okay, this is the Bitcoin trade we analyzed last week, Friday. This is it here. If you look at this one. So we actually put this and this, take this off. We actually had Bitcoin had to come down into this zone and push up back to the upside. It took its time, but it eventually came back here on Monday, the 12th of May. We analyzed this on Friday. It took its time over the weekend, and on Monday, it tapped into our zone and had a nice buy hitting TP. That was that for Bitcoin. So let's take a look at what it. Now we have basically about 15 minutes to look at the dollar. Let's be a little bit faster. Okay. Now, if we look at what USDJPY has been doing, I think it's here. All right, DXY, real quick. Great. Now this is DXY. Now, if you look at this from a 4 hours time frame, the 4 hours time frame tells us that the dollar is bullish, right? Some kind of bullish. Overall, it's bearish, but on the 4 hours time frame, we've had this little bullish push. We've had this little bullish push from this low. So where could we probably be headed? Now, this market is seated at this point, and the forecast for the consumer sentiments is actually predicting or forecasting a strong dollar or a bullish dollar. Now, what do we have here? On the forwards, we have this. This trend line is not very good, but we don't have enough time. Look at what the 1 hour time frame is showing, back to 4 hours. Okay, price is actually come down to fill this gap. There's a little gap here. There's a little gap here. Price has come and filled and tapped into this zone and is rejecting. He has rejected the first time. He has come back second time and the third time. So we are seeing the dollar kind of pushing away, rejecting this zone. Now it came down to fill this gap because it has been bullish. It has come to fill this gap, tapped on this zone, and it's pushing upward. But then if we come to the 1 hour time frame, we cannot ignore this little bearish push from here. Now, if dollar buys eventually during this news, that means we should anticipate what? We should anticipate the market selling gold or selling Bitcoin. Now, I think that's I just read the comment section and someone was asking what's going to happen to the dollar, to gold rather. Yeah, I think that was Kiki. Please, can we start with XAUUSD? Let's see if I can catch that buy. Now, if dollar here is, and if we're anticipating to sell the dollar, that means that we could probably be buying, if we are buying the dollar rather, we should anticipate the sell on gold, a little sell, but we'll come to that in a few seconds. So now we are seeing this. The market has broken out of the trend line on a 1 hour time frame. We see this good trend line. The market just came down here. It had to come here and push, but it has broken out. And it has broken and closed out with a candle. We have 1, 2, 3. Now, what will happen here in the next 13 minutes? We don't know yet. But if we look at this level, we could actually spot another level up here, where the market has come and it's actually trying to reject from this high as well. So possibly we could see maybe the market spike for a sell down or push up. But what do you have on smaller time frame? On a smaller time frame, yeah, we have some sort of a double top or triple top at this bottom. Probably this market could actually do what? Push again to the downside. We have this. So now on the 4 hours time frame, 1 hour time frame, we see that the dollar is still bullish. And coming down here, looking at the fundamental that is actually about to come out, they're actually anticipating a strong dollar. Even though the data is a little bit small, not so much, but they're actually seeing the dollar being, for those who just came, let me just show you guys that one more time. Right here, 253. Now, this is showing 6.5 on inflation, but there is no data for forecast. So either ways, we are going to look at technicals for this analysis. So on technicals, we're having this. On technicals, we have, stop sharing, 1 second. Right, on technicals, that's what we have. So coming back to our chart, we're going to be pushing out of these regions, out of this zone. Now, when you're analyzing, you want to come to look at chart patterns. Now, let's just jump straight to gold and look at what we have, any chart patterns that could actually give us any solid bias to see if we are buying or selling. Now, for us, gold has actually been retracing to a particular level. So if I want to give a small trend from here, we could have something like this. A lot of people want to buy gold. What is the reason why we are buying? Let's take a look. Okay, we have that trend line. And at this level, we have gold already giving us some bullish presence. Now, where did it actually sell down to? It sold down, breaking past this level. It broke past this level this key level here, and pushed up to the upside, closed back in here, and has come to retest it, so to speak. Why do we call this a retest? Because if we look at this from this low, what do we see here? The market has come down to this area and has rejected this one time. We see these long week rejections here. And this candle has closed actually bullish above this level. Guys, can you see my screen? Can you guys hear me? Screen not shared. Okay. We had this 4-hour trend line that I just actually plotted here. Sorry if you're not seeing my screen. I think right now it's good. You can see my screen now, yes. Okay, thank you very much. So if you are seeing my screen, I think I'll just continue from here. So we have this level. This is a key level. We had a resistance level here. Gold pushed to the downside, pushed up, breaking through this level, and has come down to retest on the 1 hour time frame, like we see here. Now let's be clear on the 4 hours. On the 4 hours, we had the market push up to this level. The market pushed up to this level here, came down, broke it, and it has been on its way to retest this ever since. Now he has retested it. Now what do we have? If I zoom in clearly, we have a sort of the market pushed down to hit the trend line for the second time and has come back to retest that key level. Now we have a 4 hours weak rejection and the market is pushing to the upside. So if this market is pushing up, that means we anticipate probably a buy on gold. Now, technical analysis is always going to surpass or beat fundamentals. So now on DXY, like you see here, DXY is giving us, we had like a double or a triple top here. It's like a double top. That means that this could actually sell down, probably right down to this level where we have this little last bearish candle here. So probably that could happen for this sell. And if that is to happen, if dollar actually eventually sells down here, that means that it's bypassing whatever the fundamentals is telling us to do. So if we're actually selling dollar, that means we should be looking for a buy on gold. Why should we be buying gold? Because we see this 4 hours rejection from this level here. Reject. All right, I think I should be back live. If you can hear, confirm. I think I should be back live. We have about 1 minute, a few minutes. Okay, we have about okay. So now on the since the news about getting out, I think this is what we have. This is what I'm seeing here for. This is what I'm seeing here for gold. I think we should anticipate a buy possible for this news coming out. A buy to this level, somewhere up to this top here. Our stop loss is going to be below this support, somewhere below here. Please make sure that you take very good care of your risks, because when we are trading, especially when we are trading, you don't want to risk your entire account, except you're going to risk the entire account, except you have enough money to risk, except you're going full margin. But without that, we're anticipating a buy. Why am I seeing a buy here? Because looking down here on 15 minutes, we have some sort of an inverse head and shoulder pattern that we just had like this. So with this bearish, bullish engulfing candle, I'm anticipating gold pushing up to this high. So we hope the news is going to be very bullish or very volatile to see a very big push. Like you said, this is what we call an inverse head and shoulder pattern of 15 minutes. So that should give us an instant push to the upside. So we have 2 minutes for the news to be released. So if you're actually entering here, the stop loss is quite enormous. You cannot do very small stop loss on gold. It's not possible. Just this 93 pips. So you cannot run from stop loss. So you must be very, 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 very careful with your risk. All right. So if the market has to actually push down, so if the market has to push down, we should anticipate the market pushing down probably to this level or to this candle. But this bullish candle gives us volume. Look at the way it closed, right? It closed very bullish. Now, this candle coming down could just be coming down to retest this low. And the news coming out in less than 1 minute. In less than 1 minute, the news is going to be out. So if you're taking your entries, we can't see. Well, we are taking a buy on gold. If you can't see, I don't know why you can't see, but I'm sharing my screen and it shows that I'm sharing. Oh, why can't you guys see? Sharing. Yeah, I can hear you guys saying you can't see. So we can see, I think the news is out. The news is actually out and the news is negative for the dollar. That means gold should actually go push the upside. It's pushing up, but the volatility is very, very low. I'm sure you can see my screen now. I can see it from here. We can hear. Yeah, and you can see too, right? I think you can see as well. Show you what the fundamental has shown. The fundamental has come out bullish. Live stream. It has come out negative for the dollar. So 552.2, 53.1. It has come out negative. That means dollar has to sell. If dollar is selling, that means gold should be buying. So now that's why the dollar is actually going up. Gold is going up right now. If you take a look at what's happening here, but it looks like there's not so much volume. But like I said, still on technicals is still showing us a very, 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 very. Let me go back to the screen. That's why when your gold trade, you just want to hold it. Your stop loss should be below the support because, like I said, this is the support gold had to break out from. That we saw on the 4 hours and the 1 hour time frame. It has broken out from, come back to retest this level. What we see here is the market coming down to retest this. But on retesting, it came out, rejected, and it's going back up. So either way, if you're actually checking its buy, your stop loss should be below the support level. If you have enough money, you want to put your stop loss below this week's because the market could still come right down here. But then this is a very nice buy on gold. And where we headed to? We're headed to this level. Why are we buying gold? Now, just normally on basic market structure, what do we have? We have the market living from this uptrend. It gives us a high. I can't see what you're explaining. I can see it from here. Is your network, Christopher? Sonita Christian. We have a high here, a low, a lower high, a lower low, a lower high, a lower low. Now, what has happened? The market is coming back up to give us some sort of a lower high at this level, or probably to this extent here. Before, if it's selling, it has to push back down to the downside. But at this point, we are taking this buy because we're anticipating the market pushing up, even getting to probably this zone, to this zone here. But then there's some sort of a 15-minute supply zone at this level where gold should actually buy up to before maybe we anticipate more sales. Now, one thing you should trading is that when you enter for your trade or you enter for a buy or a sell, even if the market, even if the trade is going in a direction, the market does not owe you a clean price action. A clean price action means that the market would not just leave and move directly to your direction. There could be some slow movements. The market could actually be very, very slow. Sometimes it's going to be fast. If it's fast, good. If it's not, you should anticipate or hope for the best. All right? You should just hope for the best as well. So we are trying to have the best possible risk reward of at least 1:2 on this. Now, what is happening here is just a little normal huddle. Now, at this point, the market pushed up from this bullish candle. This is what gave me the confidence that we're going to push up to the upside. The volume this candle came with. So whatever happens, we could see probably the market come back down into this zone and then push up. As a trader, you need to anticipate where could the market likely go next to before actually going in my direction. Or if the market is actually buying, where can it stop and then have a little retracement? Why? Because trading is very psychological. If you have a psychological tranquility when you're trading, at that point it enables you to hold your trades for longer. It helps you not to make rational or wrong decisions. It allows you to hold. It's true that a lot of traders say when you're trading, set and forget. All right? But then, is it easy to just set and forget? No, it's not easy. So the best thing when you're best thing to do when you're trading is just actually to set your levels, have zones that you anticipate the market coming to before retracing. So when it starts retracing, you are not actually psychologically worried. You anticipate it and you're ready for it. Now, on this trade, on the 5-minute time frame, what's the worst that can happen on the 5-minute time frame? Now, have that in mind as well. The worst that can happen is that the market could come back right down to this level. But then I see with my eyes from here a very clean, nice inverted head and shoulder. I have a left shoulder. I've got the head. All right. And I've got what? A right shoulder. Now, what has happened? The market has broken above the right shoulder and has come down to retest it. So this is where conservative traders come in to start buying. Aggressive traders started buying right from down here, which was good or okay for them. But if you're conservative, you want to start buying after the market does what? Breaks through the neckline and comes to retest it. And what do we have here? We have this neckline has already been broken and the market has come down to retest it and we are pushing upwards. So this market should move up without any serious hurdles. So if you took the trade, if you're in this trade on gold, can I see you guys in the chart? I hope you can hear me very well. It's clear and great. Who took the trade? Who is on this trade? If you're on this trade, indicate. If you're not and you're looking for an entry, it's kind of late because already from the zone where the market started moving from, we are already about, from this zone where the market started moving from, we're already about how many pips? It's already about 76 pips. Funny enough, gold moves extremely fast. That's why we always caution beginner traders or new traders to be very careful with gold because gold moves very fast. You don't give you time to think. While you're trying to calculate your risk or calculate your stop loss, gold is moving. And sometimes you might want to calculate your risk to come and put an entry on gold. And guess what? It has given you what? A bigger stop loss. So if you're trading the financial market, you must be very fast, especially if you're trading very fast currencies like gold, Bitcoin, sometimes GBP, GBP, JPY, currency pairs like USDJPY as well. Now that's that for gold. Let's take a look at Bitcoin. Now, if this gold pushes up right up to this level here, you must not make $1 million in one trade. If you push it right up to this level, you can look to do what? If you had more than one position, you might close one position and maybe hold the rest. or you could even close all your positions. All right. The point is, you're aiming to make money. You're not aiming to make $1 million in one trade. Basically, you just want to see how much money you can make on a particular trade. And if it gets here, for example, you can look at the price action and maybe shift your stop loss to entry or break even. But then, when do you break even? I'm going to show you guys on the chart right now. Some traders break even too early and the market comes and takes them off. Before you break even, the market must have pushed up. Let's say this was the market pushing up, come down. If the market breaks up from here, normally your stop loss is going to be down here, right? Normally your stop loss is going to be somewhere below this level. So before you break even or bring your stop loss to entry, you want to see the market break this zone. That's now from here to here is what we call it. Market break structure to the upside and come down to retest that level. When the market retests it and then pushes up to the upside again, what happens? You now know that the market is never, might not come back to this zone. All right. So the market does this and come back here. You can now shift your stop loss. Your stop loss was, let's say, at this low down here. You could probably move your stop loss from here and do what? And bring it either to your entry or maybe bring it to this level. Why? Because on the market coming back, just what? To respect this other high that it actually broke out from and do what? And continue pushing to the upside. Okay? Now, what experienced traders do is what? When the market actually gives them this level, when the market breaks a particular level and comes to retest it, what they could do is they could add more positions at this level. But then, gold is very, very volatile. Gold is very, 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 very fast. And if you're not sure of what you're doing, just hold your one position and trend it to TP. With time, you're going to build the mindset to hold for long. So what do we have? So if the market actually breaks a particular level and retests it and pushes up, you can now break even. But the market gets here and we're no more on this live, you can look to close your positions or bring your stop loss to entry and continue holding maybe to TP. Either we have these zones or these zones. But just anticipate that anywhere where you see a blue candle on a bullish candle on a bearish trend, the market getting there would have a little bit of fluctuations or would have a little bit of disturbance. So anticipate it so when it happens, you're not worried psychologically. All right? So that's all for gold. The initial push for the news has already come out and the push has actually gone up. All right. So now price action will just come back to play. Like I was saying earlier, let me take this off. Like I was saying earlier, the worst that can happen for you on this trade is what the market coming right down into this level. Okay, the market coming right down into this level. Why? Because down here we have these wicks, and like you all know, where you have wicks or above or below, that's where money is seated. ICT traders call it liquidity. Liquidity or money is found on previous highs and previous lows. So this is a previous low, and these are previous, and these are highs up here. The market has left a wick somewhere here, creating liquidity. So the market comes back in this next time, it will come back to take out this high and then fall. You see, anytime the market comes a high, it falls. Like for example, look at this other high here, this one. Let me take this up for a second. Anytime the market comes and gets to this, look at when the market got to this zone. Let me take out the pen. Let me just give you a small nugget so you understand. Okay, highlighter. Perfect. Now look at what happens here. When the market took out this high, what happened? From here, it dropped. It has taken this other high now. What has happened? It has dropped. So when it drops right now, it could now drop, leaving this other high for the market to come and take it out later. So the market comes out later and takes out this high again. What happened? It could still drop. But guess what? It's pushing upwards while doing that. So previous highs are areas where there is what? Highs are areas where there is what? There is money or there's liquidity. So you should anticipate that the market would always take out a high and probably have a shift. All right? Can you guys still see me? Okay, yeah, stop sharing. Okay, let me go back to the screen. I know you guys, some of you are not around your units, so I think we are back. You can see my screen, yes? Okay, perfect. So what I was saying is, anytime the market leaves a high, it has left that high because wherever that high has been left is an area where there is money. Okay, there is dollars on every high, or all of these highs like this. So that's why when the market leaves a high, it comes and take the high out and it falls. Like now, the market came out, took off this high, and it did what? And it fell. It has fallen, now it's going back up. Probably you check out this other high again and still fall. So now this is just to help you psychologically to understand that when the market, depending on the amount of volatility or the amount of volume that the market has, it will not just push exactly up one time, but it might push up and come down. Price is fractal. When they say price is fractal, it means that the market moves up and down in a wavy form. If you're lucky that you enter a trade and the market moves directly up and just goes up to your TP, you're lucky. But most of the time, the market doesn't move that way. So now I was explaining that the worst that can happen to this trade is, or what you anticipate next is, the market maybe gets to a particular region and then falls back down to this level. Why? Because if you look here, the same thing happens, or anticipate the same thing. Like I've just explained earlier, there is money at this on these previous weeks here. This is previous weeks. That shows what? There's a liquidity pool at this low here, or there's money still here. So the market could actually buy back again, come back into these zones. Why? Because this is what they call a demand zone or a resistance area, or if you're an IC trader on this live, what they call an order block. Do you understand? Now, a bullish order block is where you should anticipate buys from. So the market now decides to come back down here is because money up here has finished, or money up here is not sufficient. So the market needs to come down to get more money. Okay, so people who bought the market at this point, where their stop losses, their stop losses are below here. So the market could still come back down here, take out all of the money or the stop losses down here, tap into this demand zone or this order block and do what? And then now push to the upside. Either ways, gold is going up to this level or this one. Now, when I say either ways, market is going up here, we can never, or we should never predict the market. We just look at what price is doing and anticipate what the next best move and follow it. Okay? You don't want to beat your chest anywhere and say, I don't talk, say go to buy, or I don't talk, say go buy or sell. No. Looking at price action right now, we are seeing very good reasons to buy, or we are seeing bullish tendencies in this market. We have the fact that the market has bought, is buying from a previous resistance that turned support, has given us a chart pattern. And if I look very well, I can see a little trend line. If I spot a little trend line on this zone here, that could do what? That should continue holding price. So either ways, this is just me trying to give you more reasons why you want to continue holding your buy, or how to actually manage your trade as you're in profit. All right. So this helps you to have a tranquil mind, knowing that, okay, we are buying up, but the market could still push back down, touch this trend and continue going up. All right. So that's just that. That's that for gold. I think our entry was somewhere. Let me just put it back. Our entry was somewhere here. And it's coming back to entry. So we're anticipating this as our take profit level, and our stop loss was below this. I think that's where we were. So either ways, no, we had a 1:2 risk reward, right? Okay, good. It was right. We are targeting this high. Perfect. So that's that. Don't allow red candles. Don't allow red candles scare you. One best or the most fundamental thing about trading is having the mindset of the fact that you could hit stop loss, you could lose your money, or you could lose the trade. And if you lost the trade, do you still have enough money to take another trade? Do you still have enough capital if you want to take another trade? If the answer is no, that means you're over risking or you're over leveraging. If you're doing that, then you're not a very, very great trader. Great traders are traders who can take a hit and come back to the market. It's okay to take a loss. There are traders who have traded for 10 years, 20 years, they still hit stop losses. But when they hit stop loss, do they lose the entire account? The answer is no. Now let's take a look at another pair. We'll take a look at what Bitcoin is doing. Let's take a look at Bitcoin. Is my screen visible? I think. Yeah, small capital, small risk. Big capital equals to big risk. There are traders who use lot. There are traders who are using lot size 100. You cannot just come out and use lot 100 with your $100 account. It's not possible. The TP, how many pips? All right, the TP from here. How many pips was the take profit? Gold. Okay, the full take profit here from our analysis is showing about 325 pips. That's the full TP. But I said, when the market actually gets to the level, when the market gets to the level of about 179 pips or 190 pips, you could look to take your profits or close your positions or break even if you want to hold, or maybe take partial profits. All right, that's what I said earlier. The full TP here is about 320 pips. If the market gets there, good and fine. But if not, great. All right, so that's just it. So let's take a look at Bitcoin. What is Bitcoin doing? Okay, I'm not sharing, sorry. All right, allow. Those two people on my chat, we don't like to base. Oh my. Okay, it's back. These are okay, it's back. These are past glories, so we'll take them off. This was last week's analysis. Let's look at what Bitcoin has for us now. So 4 hours, we are still bullish. The market has come into the zone where we anticipated and it has bought off from. But we still have a lot of imbalances at this level on Bitcoin. We still have a lot of imbalances here. What are imbalances? Imbalances are just levels in the market where the market pushed out from. If I come to the daily time frame, you will see that this is a very long bullish candle. All right. This very long bullish candle tells us what that market actually pushed up from here with an impulsive move. I'm not sure you can see my screen. Let me try again. I'm not sure. Left from here, pushing up with a very, very high impulse. And this high impulse has created what we call this very long candle, created an imbalance. Now, an imbalance would mean the market needs to come back and fill it. I cannot hear myself. Am I audible? Can you guys see my screen? Nope. Oh, this lights. My screen is still not sharing. I'm putting everything to you. All right, let me just share the entire screen. Audible but not visible. All right, thank you, Mom. I think it should be good now. All right. I promise you my screen is shared. I promise that my screen is shared. But the loop, the time, the intervals, yeah, I can see it's shared. Bitcoin is crypto, and crypto could sometimes do what it wants. We are very positive that gold is on an uptrend and gold is going to continue pushing to the upside. But you see, we are not very confident. All right, Bitcoin could get one money and start going back down. We have already hit the all-time high of $109,000. This is and we are pushing that back again. That means that what do we have up here? We have some sort of an all-time resistance at that point. Okay, on the daily time frame. That means either Bitcoin is going up here to take this out, or it's coming to is coming to that level to fall down. My screen has stopped sharing again. Why does it do this? One more time. Yeah, Cynthia. Cynthia. I too, I just noticed. Let me share again. You're bearing with our network is better sometimes. I've noticed every Friday when it's my turn, the network becomes very, very unbecoming. I promise I've shared, but I still can't see it. Okay. All right. I think you guys can see my. So what I said is Bitcoin this is the all-time high on Bitcoin, where it came to 109,000 and it dropped. All right. Where did this drop go to? The market dropped into this region. And what was this region? This was a previous resistance that turned support. All right. Now remember that support and resistance are not just lines, but they are entire zones. Okay. So I could just add a zone showing that Bitcoin struggled with this area in what year? In 2024. It came back here again in 2024 in June. It came here again on October 2024. Then it actually pushed up here in November. Trump's raise to power pushed Bitcoin above this level. Now it broke it, came and gave us an all-time high, and he's coming back down here. He has respected it as resistance turns support, and it's pushing back upwards. What do we anticipate? It's simple. You look at it on the higher time frame. This is what I tell everybody. If you do not know how to trade, always make sure that you're looking at the market from a higher time frame perspective, because the overall directional bias will always give you or tell you where the market is headed at every particular point in time. All right. Now, if you look at it critically, Bitcoin left from where this was a previous level where Bitcoin was having difficulties breaking, and he succeeded in breaking it. All right. It's also his zone. Now, guess what? Basic market structure, right? Push to the upside, it breaks out. It comes, it breaks and comes and gets here. When it breaks, it does what? It retests. It has broken again. It's a gradient in unit. You don't know when it is going to stop and start pushing downwards. But either ways, on an uptrend market, we look to buy the market. On a downtrend, we look to sell. I stopped sharing. My screen stopped sharing. Let me come back. Like I was explaining, we don't know when the market is going to break to give us a new all-time high. All right. But then all we can anticipate is the market is pushing upwards and it's coming to this previous all-time high. Okay. Because when it left from here, what date was this? This was on the 19th of January. We had the all-time high. The market pushed back right down here to retest the resistance that it broke as support and is now pushing upwards. Where is it headed to? It's headed to this level. When the market gets here, two things could happen. It's either it breaks and pushes to the upside, or it rejects this level and starts coming back down. But for now, we don't know. But we are just looking at what price action is saying. So price action is telling us that the market is what? Is heading upwards. So we know that we are headed for this high. How do you make money as a trader? You make money when you anticipate, analyze the market, and anticipate the next best position or the level where the market is headed. Clearly, the market is headed to this high. And what is market creating up here? It's creating on a daily time frame. It's creating some sort of a chart pattern. This could be like some sort of a bullish flag, a bullish pennant, a bullish wedge, or whatever it's creating. All right. Now, You don't want to cram the names. You want to know what it does. And most of the times, when the market creates these patterns, what happens? It pushes to the upside. The same thing happened up here, and it pushed to the upside still. All right. This is what we call an assumptive triangle or a symmetrical triangle. All right. Or better still, we call it a bullish pennant. Okay. So we had something like this. Bullish flag, whatever the name is. But basically, they do the same thing. If the market gives us a solid push to the upside and it starts consolidating like this, it's creating what? It's creating volume for it to continue pushing upwards. Okay? So in the nutshell, we're anticipating for the market to do what? To continue pushing to the upside. Impulse move, another impulse move. So now, what will happen after this? The market could leave from here and do what? And break out of this zone, coming to this level. When does it break out? We don't know. But now, do we trade a daily time frame? No, we analyze it. So what does the 4 hours look like? Like I said, this is a lot of imbalances. There's a lot of imbalance here. So we should not be surprised if the market leaves on Bitcoin here and decides to sell first, to come right into this zone here, before pushing back upwards. But if it leaves from here and just pushes upwards, no harm, right? It could just push up at the same level. So on the 4 hours, what have we got on the 4 hours? On the 4 hours, this is a very nice support zone. Am I still sharing? This is a very nice support zone that we could anticipate the market coming back to before it starts pushing upwards. But if it doesn't, I could adjust this like this and this like this. So the market breaks out and closes above this pattern. We cannot anticipate the market do what? Push it to the upside. So we should be keen to see when it breaks and maybe retest, and then we're going to buy it back up here on Bitcoin. I've stopped sharing. Oh my. Can you guys hear me? I don't know, we will format this screen and format more. Am I audible? Am I audible? Yes, great. All right. So what I was actually showing on Bitcoin. Oh, can you guys hear me? Hello? No volume. All right. I think you can hear me now. Volume. Yeah, great. So back to no volume. Yes, sir. Great. 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 We're active. I'm sharing my screen. I hope you can see. Can you guys see my screen? Okay, yes. I can see from here. Great. So now this is what we have on Bitcoin, like I was saying. Someone says, please check gold once more. Let's take a look at gold. Okay. I'm on gold right now and gold is selling. All right. I'm on gold. Who asked me to check on gold? Who was that? That was Emmanuel Taiko. I'm on gold. So on the 30 minutes time frame, okay, thank you very much. On the 30 minutes time frame, what have we got? We have this trend line we just drew here, and the market has closed below this 15 minutes trend line, and it's actually pushing downwards. What is the one that's showing? We can actually have that good trend line, but very, very big bearish pressure or selling pressure on gold. Now, if you have this kind of selling pressure, you don't want to continue holding your position if you're still in. Why? Because it shows that the setup is becoming invalidated. But what you should anticipate is this is the resistance area where the market broke into and could be coming to retest it. All right. Our sources are below this level, right? But then remember that we had a zone where the market could actually come to buy from. We saw that right from the 5 minutes. Like I showed this right here. So probably you want to close your cut your losses short and don't hold for so long. You want to cut your losses short so you don't actually incur plenty losses. But then this actually could actually be the level to hold price. But if not, it could actually see create us another level here. Now, if you take a look at this, what I just added right here, we have this zone that has been holding price. Now, not if you are trading smaller time frames, you're not intending to hold for long. All right, example, we are trading gold. We are intending to hold something like 50 to 100 pips ranges and exit. But if you look at the 1 hour time frame, what do we have? In 1 hour time frame, we see that gold is still overall very, very bearish. All right. And if you look at this zone where the market broke out from, there's some sort of another demand zone seated down here and another imbalance that has to be filled. The market has tried to get here but has not gotten here. So probably this could be what is attracting price, or what we call draws on liquidity. What is drawing price, or what's magneting price coming down here? There are two things involved. Either gold respects this level, pushes up here, and then falls back down to this level, possibly touching this trend line, or it comes down here, hits this level, and continue buying up. Either ways, we need to manage our risk very, very effectively. But what I advise you to do now is close, because most of this strong selling pressure could affect you psychologically. All right. So on the 1 hour time frame, we should see exactly how this candle closes. We have about 20 minutes for this candle to close. If the candle still closes in this range, then I'm still going to see positive on a buy on this. All right. I hope you guys can hear me. Okay, yes, you can hear me good. Cynthia says, is it not a liquidity sweep? Let me put it up in a very We look at a small time frame like I showed you earlier here. The market has given us these levels as areas of what? Areas of, like we call it, liquidity areas, these zones. We have these wicks seated down here. And I said, the worst that could happen, or what you should anticipate later, could be price coming right down into this area here to buy from here. Now, we're anticipating on possible zones where the market could actually take a buy from. All right. But if the market actually breaks through all of these zones, then we should stop trading or stop looking to buy. We should not fall straight. All right. We must not buy gold, but we can anticipate where the market is actually buying. Remember that over the time from the 4 hours time frame, it has been very, very bearish. All right. If you take a look, it has been bearish. But then it broke this level and came back into it and has come back to retest it. So this is what we have here. All of these, like we see here, is a pushback to retest the level that it broke out from. All right. So remember what I said at the beginning of this breakdown. Okay, great. At the beginning of this breakdown, I said on Fridays, trading can be very, very controversial. You could actually have very, very good zones, but the market violates them. Because now, most of the times on Mondays to Wednesdays, the market gives us what we call a directional bias. And from Wednesdays to Thursdays, sometimes there's midweek reversals. So the market could be reversing. And on Fridays, the market is preparing to close. Today is the last day of the week. And on the daily candle, the last daily candle tells us that we have about 6 hours to market close. Now, what is the market actually looking like? We still see the market rejecting these levels, right? On the daily time frame, we have the market broke out of this resistance zone, becoming support. Here, rejection, rejection. So this candle could still come and close here like this at this level, above this level. And next week, we can anticipate the market now pushing to the upside or having new buying opportunities. All right. I don't know if Lisa has understood what I was explaining. So either ways, on a higher time frame, we have a directional bias. We're still bullish, but then looking at this, we will still see the market doing what, respecting this zone and pushing to the upside. Why? Because we've seen rejections here. We are trading just what we are seeing, but the market will do exactly what it wants to do. If it does that and you're on the trade, then your stop loss cuts you out and you don't lose your entire account. I don't know if that's clear enough. We cannot avoid losses to the market, but then we should be prepared for the losses and anticipate how much we are going to lose. And if we are satisfied with that amount, then we go in and take the trade. If not, you must not take that trade. I don't know if that's okay. So that's that for gold and what's happening. Like I said earlier, this Friday session is we are most using it for a forecast. What should we anticipate next week? Now we took a trade here just because we saw a fundamental and we caught it. It actually had a nice buy because in the 1 minute time frame bought about 44 pips. So it had a 44 pip move to the upside, and if there was someone who was trading just a fundamental, already made money and exited, but now the market is actually still showing us that there's still very strong bearish momentum. So the final advice I'll give you is that we should actually stop trading. It's Friday and look to see what happens in the market or anticipate or push for next week's market. I can say JXY is buying on a strong force. Yes, that means the technicals on JXY is actually pushing it up. Let's take a look at JXY. Yeah, JXY is actually pushing up. Now, what happened to it? Let's go back to, let me just show you something here. Okay, let me share this. Okay, I'm sure you can see that. Now, this is a fundamental sheet, right? And this sheet is what we looked at earlier before we started the live. And this news is out at 3 p.m. We had the consumer sentiments came out, and it came out negative. All right, that means dollar was supposed to do what, to sell, but dollar has sold already and has gone back to originally what it was doing, buying. Okay, what does that tell you? It tells you that overall technicals surpasses or would always be above fundamentals. Sorry, yes, above fundamentals. So that is that you stop. Why? Because you're preserving your capital. Capital in trading is very, very essential. Your connection is unstable. Capital preservation is of utmost importance as a trader. So you must actually continue to hold your capital very, very, very judiciously, because if you lose your entire capital on taking not too short trades, you might not be lucky when the market starts moving in your favor. So we'll just what we do now is just continue analyzing to look at what could next week market actually show for us or show to us. All right. I'm positive that I'm still audible and you guys can still hear me. All right, great. So we've looked at so let's just finalize on Bitcoin and move away from that. I'm going to go back to sharing. Sorry, on gold. I think it's gold. We're on gold, yeah. DXY has pushed out of this zone and is purely bullish. Okay, now gold is still to test that level. So for our analysis, we have two things we're looking at. All right, there are two things we want to continue looking at for the analysis. It's either the market respects this zone and continue pushing upward, but now we have a 6 hours time frame or 6 hours interval for this candle to close, the daily candle to close. If the daily candle closes above this resistance zone support, that means next week's market, we could anticipate the market doing what? Probably coming back down to this trend line and start going up. Or we see a gap, the market just open and give us a gap pushing upwards, or it breaks this trend line here and come down into this level. All right, come down to this level where we have this other key level here, probably somewhere down here. Why? Because these are a lot of imbalances that gold might want to feel. We should remember that gold is still overall bullish, but then this movement downward movement started when we had the introduction of what? This double top at this level. At this double top, the market started pushing downwards. So on a 1 day's time frame, we could anticipate the market doing what? Either rejecting from this level and break this, continue going upwards, or it could push back right down to this level and then continue going upwards. Either ways, gold is still bullish until the market closes below this level like this. I don't know if you guys can still see my screen. I thought my screen is not visible. Gosh. Okay, I think this should. Yeah. So we are going to actually say we're on a downtrend on gold when gold comes and closes below this level. All right, because right now this is actually the last higher low scenario where the market actually gave us and it started pushing downwards. All right, now we took this as the market coming down to retest this level, but then I'm kind of confident that it might actually continue going back upwards. Now I'm talking from what I'm saying because of this resistance level, but if not, the market could do what? Could still continue doing what? Coming downwards to this particular level and go back up because of these imbalances seated here. If that happens, then next week we'll anticipate more of this week, or since this month started, we have been selling. Gold has actually been on a downtrend since the beginning of this month. Gold has actually been on a serious downtrend. So we might have now probably mid-month reversals. Today is the 16th of May. We might have mid-month reversal for the market to do what? Turn and start going back up. But either ways, we'll just wait to see what happens in this market. All right. So on gold for now, our stop loss has not been hit yet. The market has pushed right down, but is rejected. But like I said, the 1 hour time frame has not closed yet. The 1 hour candle will close in 9 minutes. Probably is pushing to close back into profit. If you look at this, 9 minutes for the 1 hour candle to close, it has come back right to this level, and it's still doing what? It's pushing back upwards. Either ways, I saw a very nice buy for this, but it looks like it's not ready to buy just yet. All right, that's it, rejecting that level I mentioned. Probably is not ready to buy just yet. So either ways, whatever happens next week, we'll look at how the market opens up and how the 1 day candle closes before we make a decision. Is gold still bullish? The answer is yes. Why? Because I have a weekly trend line and a daily trend line that the market is still respecting. And a trend line is valid as long as price I want it to start buying from. I want to look at, I don't know if he's gotten to therefore it's giving us this solid buys. Hello? Okay. I think when you show your entire screen is better. And back to what I was sharing. Okay. On DXY, we have this push that has pushed above here. Okay, no, we're on USDJPY. Now, remember that DXY analyzes the dollar and USDJPY has the dollar as the base currency. So if we see what we have here on this 30 minutes time frame, we have this very sharp trend line. And we had the market break past this other trend line here. All right. Now this trend line has been broken and the market is actually pushing back upwards. Where could the market possibly be headed to? Or headed to this level, this high here. Now, this level is 50% of this imbalance. This is 50% of this imbalance, and this is the last or almost the toppest level of support that became resistance that we saw here. So either way, the market could actually be coming into this zone to actually sell from. Now, what other key levels do we have here? We have another key level around this zone here. So this could be areas where it could hold the price, could hold this very, very high surging dollar. Anticipated dollar buying rather from this level here. But market did not get there, but it's actually pushing up already. Why? Because I like to first of all anticipate where are areas or where are the zones where the market could actually come and give us and show us where he has taken out his money from. So if you look at this zone, there's also another key level here where the market tapped into before pushing upwards. Yeah, the market tapped this level and then it pushed up. But I'm still very confident that the market should come back down here because we are still kind of bullish on UJ. But now it has broken off this trend line. You could still see it as a 1 hour trend line. It has broken off and is actually very, very bullish. So those who saw this earlier probably used the aggressive entry or the immediate entry when it broke out of this trend line and closed like this bullish. So those who saw here entered here with a buy and it's pushing upwards. Yeah, you might be looking to exit the market at this level or break even at this level for it to maybe buy up to this trend line or this other level. If it gets to this trend line, we might now see the market do what? Give us maybe a push back from here, back to into this zone or to this downside. But initially, where was dollar buying or UJ buying selling down to? Now to close this entire gap. But it came down here, tapped into the gap, went up, and came to close it completely. It has been closed and has tapped into a former resistance turn support, and it is pushing back to the upside. Could this be the end of the downtrend on UJ? Possibly, possibly not. But next week's market, we're going to see how it happens or how the market opens, how fundamentals actually give us that possible bias. Now let's go with the higher time frame is showing. On the higher time frame on UJ, we are still bearish because the market has not been able to do what? To take off any lower high level. So now on the daily time frame, we have the 6-hour candle. The daily time frame has 6 hours left more to continue pushing up from. Could the market be creating areas of liquidity to take it out later? Possibly. Why? Because we have some sort of a block down here or a demand zone where the market could actually come to really buy from. All right, this is what we have on USD on the daily time frame. We have one zone seated right down there. Why? Because that's the level where the market got to, and the last one it left, and it has not, market has not come down here ever since. So I'm anticipating. Let me take all of these off. For next week's market on UJ, I'm anticipating the market coming back down right into this daily supply or daily demand zone rather, into this daily demand zone, and possibly now we can anticipate buys from here. Why do I anticipate the buy from here? Because the market did what? It broke past this level, the bottom of the candle. That means that there was very high volume that the market left from here. It did not wick it out, but it closed with the body, even though it was very small, and then pushed back to the downside, coming to where? Possibly this last demand zone. So next week's market, I want to anticipate dollar or UJ selling into this zone and maybe pushing to the upside to take out this other high. So that's what I'm anticipating for next week market. If that happens, then that's going to be absolutely great. But we should remember that UJ actually, from what we analyzed last week, dollar UJ came into this zone, and since it tapped into this support region, it has been pushing upwards. All right, it has been pushing upwards, and there it's headed. Can we actually see a trend line in this zone? Yes, we can. If we actually look, we could see possibly a trend line here, like this. So this could be what UJs go for us next week. Probably the market pushing down into this trend line or into this zone we drew earlier on the 4 hours. Either ways, we have our levels, so we're anticipating the market to buy out from. So that's all for UJ. I'm still looking for buy opportunities because from this level, UJ is pushing upward. So we have this for a short-term rejection or push, but this for it to continue is buy back to the upside for this on the daily time frame, like we saw here. This on the daily time frame. That's that for UJ. So next week we'll see how the market opens, and the market opens and continues selling. Then I want to anticipate buys from. Yep, that's that for UJ. We've got Bitcoin, we have UJ, and we have gold. Yeah, gold is still respecting that area. Okay, the 1 hour candle has closed bearish, and a new one has actually opened. So if you're taking any trades anymore today, let's see how next week opens like. So that is that. I don't know if there's any questions in the chat. Any questions in the chat? Any questions? You have about 19 of you here. Or is there any pair anybody wants me to look at? Any pair anybody wants to look at? Maybe for next week's market? By all means, you could take a look at that. Okay, no comments. So I think everybody's good. So I personally analyze these 3 pairs because that's what I mostly trade. I mostly trade gold, USDJPY, Bitcoin sometimes during the weekends. I hardly trade Bitcoin during the week. But today, Fridays, I seldom trade on Fridays because Fridays markets are always very deceptive. on Friday market. So very, very deceptive. So if you have any particular pair you want us to look at, I would look at it. But if you're not, then great. We go now probably exit to take or prepare for our weekend. Today is Friday. Market closes in 6 hours. Do not make any decisions that might lead you to losing your capital or your entire account. Like I said, not trading is trading. So if you're not taking a trade today, that means you've preserved your capital, and it's very almost important. All right. So without that, you guys have a good weekend and keep your eyes in the market. You could trade Bitcoin tomorrow. Bitcoin is open during the weekends as well. And just look to see how Bitcoin reacts to the levels we have actually created, seen, and possibly you would have a good entry on any of the market. All right. Have a great day. Bye bye. See you next time.